So when we met a couple of months back, you said that you sold some of your Tesla stock, Shashank. So I have a couple of questions around that. So one,
Sure.
why did you sell? What was the trigger and stuff like that? But the other question is, you sold because you bought at some point in time. So why did you buy all of it in the first place? So you can answer this question in any chronological order you wish, but I'd love your thoughts on this.
Let me order, answer it in my evolution of how I went into Tesla. So Tesla and Solar City were one of my first few stocks I bought and started investing in individually, because that's a company I fundamentally will change how humans live on multiple fronts. And also, I believe in Elon Musk.
He was quite popular,
Yeah.
Even at that time,
Okay, so I initially, when I bought Tesla, I bought it around when it was 220 or 230, and then in 2016, it dropped to 150, and I'm like, this does not sound right. It is massively undervalued. I was lucky enough that I had some free cash, so I took it, just went and bought a bunch of stocks.
So a lot, did you put a lot of a good percentage of your portfolio in Tesla? Or just did you were you scared?
It was a decent percentage, but I fundamentally believe in it.
Got it.
Yeah, and obviously Tesla has been growing and it's been good for me, but it's been extremely volatile. And I think on average it was around 300-ish, 250 to 350 range, but it's being very volatile. And I did something really stupid, right? I was like, once the stock is 350, I'm going to pull out, because Elon Musk started becoming extremely volatile as a person. Okay?
So sorry, when was this?
This was in 2019. Okay. So I already decided, Elon Musk started becoming really volatile. I fundamentally believe in Tesla as a stock. So if the stock is 350, I'm going to just pull out, wait for the stock to drop, and reinvest in it. Surprise, surprise. The stock just continued taking off.
And did you exit completely?
Yeah, I basically sold my entire Tesla position, right?
Okay.
Because I was hoping it'll drop back to 250. Elon Musk is just crazy. He will say something stupid, which will scare, which will freak the investors. And I'm like, okay, now instead of having 100 stocks, we have too much. Let's say instead of having 10 stocks, I would have 15 stocks now. I've got free money. Very stupid strategy. That's one big learning. As I said, right, strategy is evolving. This was definitely one of it. And obviously, I had this money from my sale of Tesla. And fortunately enough, when the pandemic hit and the stocks crashed, the first stock I decided to reinvest in was Tesla.
Okay.
Elon Musk still drives me nuts, but I slowly started making my peace with it.
Got it.
Interesting.
But that is my story of Tesla. I can do it all too well.
Yes.
So right now you again hold a lot of.
Yeah.
Right now you again hold a lot of Tesla stocks. Okay.
Not as much as I used to hold previously.
Okay.
Because the stock just appreciated a lot more.
Interesting.
Okay.
So then follow-up question to both of you is about SpaceX, right? So if SpaceX goes public, Shashank, first would you buy immediately? Would you wait, or would you just no, I'm not buying it? What's your thinking?
I'm buying it. Obviously, I plan for the buy. So you obviously know, once somebody starts filing S1s, that they're going to, in the next 6 months or so, they're going to basically start having the road shows is when a company will go public. I'll start preparing for that. So I'll start figuring out what assets can I sell. Then I'll figure out how much can I buy, and then I will just go and purchase on the day of IPO.
It will be a lot harder for you though. It will be a lot harder, right? Because I guess it will be oversubscribed, I'm sure.
Well, the thing is, the way you can't buy it as part of the IPO, but as soon as it hits the trading floor.
Okay. Oh, right. Okay.
Day one, minute one, I'm just going to buy it.
Oh.
Interesting. So Nitin, what about you, Nitin? So SpaceX, what's your?
I have no idea. I mean, because I don't know. I mean, so I read about Tesla, I think a long time ago, right? And about the car thing, and it looked good even then. How I think I probably would have bought. I mean, at that time, I probably wasn't even investing in stocks at the time. I would have bought if I were, because again, like you say, you can see companies that make a difference, and only the US, only the US seem to have it, right? But I would have bought. But yeah, I mean, but then SpaceX again, it's I don't know much about it. I don't know how different it is from NASA. I really don't know much about it for me to answer. So I mean, so I would probably read up, but if it's not very different from what NASA does, then I probably wouldn't buy. I think it will ride the Tesla wave, and my bet is that hey, it might actually get overhyped on day one. So I probably, but then I don't know much about SpaceX. Right, what I'm speaking must be complete nonsense. I don't know. You guys can correct me about SpaceX, but if it's similar to what NASA does, then why should I look at it? But what Tesla wasn't similar to any other company.
So I'll actually give a rebuttal to that. So the way Tesla, so NASA, if you are not aware, has basically fundamentally stopped sending rockets on its own. It now contracts it. So previously you had a bunch of contractors like Boeing and stuff who, with NASA funding, send rockets up into space. SpaceX has come in and changed the game in a way where they're like, previously rockets were a one-time thing.
Yeah, I heard. Yeah,
and they have said we'll make it multiple users. So they are proposing reducing the cost of launching a rocket by 10x. So if that is happening, and because they're a private company, you're going to have not only American, what do you say, companies sending satellites up in space, but also you'll have companies from around the world sending satellites in space. And because it's cheaper, they will be the most viable option. And hence, I think Tesla for me was probably a bigger bet than, SpaceX is a bigger bet than Tesla for me.
But won't that be priced into the stock? Is the question.
It will be, but also when you're looking at a stock, you don't look at just today's price. You look at what its future growth is, right? And as technology is evolving, sending things up in space is going to become more frequent, right?
Good
like
point,
low orbit internet providers, you might want, I don't know, like there'll be a lot more things coming, and that is where these guys would have their foot in the door.
Yeah, the future is in space in a way. Yeah, it makes sense. Yeah, totally.
Interesting. So moving on, I think this was an amazing discussion on Tesla and SpaceX. But moving on, so ETFs versus mutual funds versus stocks. So Nitin, any thoughts? Like, do you invest in a mix of these? Any one of these only? A couple of these? So what are your thoughts?
It's only reason it's a mix is because there's a mutual fund called Parag Parikh, which has 30 to 35% or 30% in US equity, and it's, I mean, in hindsight, it's not significant enough for it to go because it's only a part of my portfolio. So Parag Parikh is only 20% of my portfolio. Then my US equity is only like what, negligible amount, right?
Yeah.
It's only like 5. Yeah, so it's nothing. So yeah, in hindsight, but so otherwise, most of it is either in index funds or it's ETFs or in direct equity.
Interesting. And Shashank, what's your take on these?
So as for me, it's always a mix. As always, you get a complex answer from me.
So I love this. Go ahead.
So ETFs are great for a stable return. So you'll obviously need a stable stream of equity build. So ETFs are great. But at the same time, I want to go for the greater risk, greater reward, right? And hence I invest in stocks, like straight up stocks. And that is that. But also straight up stocks and mutual funds are just two potential investment engines. You could have at least in the US, we are fortunate enough that we have a lot more investment engines like robo advisors. They are like an ETF of an ETF. If you think about it.
Yeah.
Right. And then you start looking at their specific, strategies. There's something else called ETNs. They are again very risky, but the great rewards. For example, one of the ETNs I'd invested in was a reverse oil ETN, a triple leverage. So basically, that's Loco Magnil.
I
have no idea what you're talking about.
I've researched some of these and they were too complex for me to understand. So I'm like, no, I'm not doing this. I don't understand this, because the only thing I understood about triple leverage is that you borrow money at low interest rates, you buy the stock. So you have $1,000, you borrow $2,000, so now you have $3,000, so you're triple leverage. You buy $3,000 of a stock, so if it goes up, it's great. If it goes down, you actually now owe $2,000 to the bank, so you're in trouble.
Yeah.
That's like buying a house, right? That's like buying a loan, taking a loan to buy a house, investing.
Yeah.
Yes,
Assuming you're giving it for rent.
Yes, but it's like you buy and sell the house every day. So it's also triple leverage means that at the end of the day, you have to sell everything and you have to give that money back. So that's what I understood
about it. What is triple up? What is it?
Because you have $1,000, you're borrowing 2,000, and you're betting that it's definitely going up. So let's say you're loaned $2,000 at, I don't know, 0.05% or something like that
per day.
You're expecting
okay.
Maybe per day. So and that's the part where it was too complex for me to even like dive deeper into this. I'm like, I'm not getting into this.
Really, it seems straightforward, at least the way you described it. Shashank, is he wrong?
Yeah, so Shashank, go for it. Yeah,
it's a lot more nuanced. I'm pretty sure
it's going to be. Yeah.
It's a lot more nuanced. It is a lot more complex. I think I can take like an hour explaining that. So
Okay.
let's just
Move on.
let's just say that you're taking money and you're investing on that. The other thing I'm trying to get into, but this is where I'm really scared about. Like obviously, triple leveraged ETNs are like probably 1% or less than 1% of my portfolio. That's too risky, and this is where my very big bets, very big rewards happen, right? If I get lucky, I get lucky. If I'm not, like,
but then that's negligible, right, Shashank? I mean,
Exactly.
1% might become 3%. What's the point, right?
That's fine, but I'm happy because that is the return I'm looking at. Like I'm fine with that much. The one which I'm interested in and I'm reading about, but I still don't know enough, is I'm trying to understand options.
Okay.
And
Wow. Okay.
and but options over time, I have decided I'm not going to do it options because my investment strategy, which this is actually a video which Agnes had sent me, or a podcast he got me into, it's called Martley Fool, where they spoke about them being like two kinds of people put money into the market. You have traders and you have investors. Investors are there for the long term, while traders are there for the short term. I realized I don't have the stomach to be a trader.
Same here. I looked at options. I learned about it. It's a way to ensure your money if your stock goes down. But yeah, it's not for me. And then I don't know. I think you need to keep looking all the time. And it's just can't
exactly. Like you need to look all the time. You need to have the stomach. You need to
exactly.
Have conviction. You need to be able to take those hits. So
it's just stressful, right?
Exactly. And that's why, like, I'm an investor. I'm not a trader, and that's why I gave up finally. I still have hope that potentially one day I might be able to do something around it and see if I can do that as part of an investment strategy. But right now, it does not. But yeah, that is my complex answer.
What's the view on company shares? Like, do you like exit, or do you like, and does it form a large part of the portfolio, or do you like keep it?
It does. It is a sizable portion for sure. Like I said, I invest in Tesla. I have invested in Facebook because I fundamentally believe in Facebook.
No, I meant your own company shares. Do you keep them, or do you like take them, or do you like immediately diversify, or what is the strategy?
So I keep them because that is more of a philosophy of me working for a company. If I believe in the company, then I'm going to work in the company, and hence I've kept my company shares.
Okay.
Interesting.
Agnes, what about you?
So I keep them, but I try to cap a particular percentage, Nitin. So I try to keep them. It's not because I think the company is going to do well or not do well. I work for the company, so I'm sure it's going to do well. Otherwise, I should be having another job by now, right? If I work for a company that I think does not grow well. But sometimes I do sell, sometimes I do buy to keep my percentage. I say that, okay, more than X percentage, I'm not going to keep that, right? And I'm also not going to keep below a certain percentage. So there are times I also buy as well to keep that portfolio. It's more from a portfolio strategy rather than anything else. So I think that's the way I would think through it. But
same here, yeah.
But I have a follow-up question on that. Is Shashank, to you first? How do you research a company? Like how do you know if a company is good? Why would you buy, or sometimes why would you even sell a stock, like a particular company stock, not an ETF?
Yeah. So for me, I look at it from like a top-down approach, where I look at industries which are basically potentially getting disrupted or are ripe for disruption. Right? at the same time, there'll be the occasional company that comes in and says, hey, we are going to disrupt this industry for so and so reason. And then I start looking at that industry. That's what happened to me with Tesla. But otherwise, I'm generally looking at an industry. And from an industry, I start looking at what companies are potentially disrupting. So Tesla, I've obviously spoken enough about, so I'm not going to give an example, talk more about it. But for example, I believe fundamentally in solar and renewable energies.
Interesting.
So what I have done is initially I invested in solar panels in companies like that, but then I realized that the Chinese manufacturers are able to flood the market with that, so it's not a great investment. I pulled it out, but then I'm like, what else? And the solar panels are going to be sold. What else can be sold for solar panels? So it's all about the inverters, which is going to be used, components. So there's a medium-sized company called Enphase. So I've got that, because those are very proprietary. It's hard to just you can potentially scale it out, but making that is much harder. So I've invested in that. Or
all mid caps or small caps, then you don't really.
They could be mid cap, small cap. They could be large cap also, right? So,
but would a large cap company be called disruptive?
I would look at Square.
Okay, I don't know about the company. Right?
So Square was started by Jack Dorsey, the guy who started Twitter. So where he wanted to make point of sale fundamentally easier, right? And so that, or for example, if Stripe goes public, making online payment easier is, or Shopify, Amazon has done well, but people are looking for alternatives to Amazon, right? Because you can't just have a one-player monopoly, and that's where I've gone and invested in Shopify. So I look at industries and see what can be potentially a disruptor in that industry, which is ripe for disruption, and then I go and invest.
Yeah, it's interesting. So Nitin, I don't know if you have any thoughts on how you invest in a specific company.
So yes, I mean, like I said, right, I look at companies that tend to make a difference. Unfortunately, in India, we don't have too many, right? I mean, we have stable companies, and we have an equivalent of maybe Coke. I mean, not a soft drink company, but I don't know if it's called innovative, but it's not really. It's widespread. Everyone knows what it is, and they sell good products. And companies like that, yes, we have ITC and stuff, but the only company that recently kind of came into this category, and again, it's only kind of came into this category, is Reliance. Even though I don't use Reliance products, but the Reliance Jio with their internet completely changed the way we live, and one aspect of the internet really, and it made our mobile data very, very cheap. And you must have, followed PewDiePie. I don't know, he got beat by some T-Series and stuff, right? I mean,
the YouTube
subscriber base.
Yes.
Yeah. And so it's because a lot of Indian channels came up during this time, and it's just that so many people have access to internet, and so I don't have Reliance Jio. Again, what is Reliance Jio? It's just another telecom provider. It's not like Google or or Amazon or something where they're doing something great per se with the technology. But I think what they're doing pretty well is in building a nice ecosystem. And in the end of the day, they are disrupting by making things very cheap. So
they're price disruption in a way.
Yes. And so that's, from my perspective, that's the only company that made a big difference. I bought it, and I bought it quite. I bought more of it. I already had Reliance, and Reliance was pretty flat for 10 years when I bought it. So I tend to reward the underperformance. Reliance was pretty flat for 10 years when I bought it. And again, bought more during the COVID pandemic. And so it did really well. But that's maybe. But then I look at companies that are. That's my extreme good case example. But apart from Reliance, there's no other company which, in my opinion, or at least I haven't found any large cap company. I look at large caps probably. I haven't found a company which is like that. So maybe because I'm only looking at large caps, but I haven't really found a company like what we have in the US. So, I just look at, I tend to reward the underperformers. So, for example, we have two stocks of similar segments. So it could be TCS or Infi or some other tech stock, right? And I find that sometimes a stock goes up over one of the two may go up over a few months. And I don't really, when I Google, there's no obvious explanation as to why. Some may not perform. So when there is no obvious explanation, I tend to reward the underperform. That strategy has worked for me. so far, I don't know if it's a good strategy. I'm not recommending it. I'm just saying this work for you. So I tend to, and in fact, I moved from TCS to Tech Mahindra, which, I mean, people would work for the company. A person who works for TCS would easily, happily move to Tech Mahindra, or vice versa. So from the employee's perspective, they're basically the same company. So
Makes sense.
there's both services, okay, and stuff. So it's a similar company, right? But Tech Mahindra went up, luckily, when I got lucky. But there are I have a lot of money in ITC, for example, which hasn't been going up, but it looks like a great company. So I keep putting more and more in, but it hasn't been going up. It's in fact a meme stock now where people make fun of it, where nobody understands why it's not going up, but it's not. So, but that's what it is. But so hasn't been rewarding in other places. But yeah, I tend to reward the underperformer. My logic is this, right? If it suddenly shoots up, I can sell and buy something else. But if it doesn't shoot up, I'm happy to wait for 10 years or 5 years. So that's my logic. Unless I hear some specific bad news. What I would love to do is what Shashank is doing. Maybe not at the small cap scale, but what I would love to do is buy the great companies which are like pretty obvious. At least I certainly would have bought them even a long time ago. If I follow the strategy of buying great companies and make a difference. But in India, we don't have that. There are some brokers which offer this buying US equity, but directly. But then the taxation is a lot different in India, right? Because you're buying foreign equity.
Okay.
But I'm still considering it. Considering it because but
the returns are there. So.
But then the brokers that offer it, I don't know how reliable they are and stuff. So maybe if my current broker is very reliable and if they offer it at a very cheap rate, then that's something I would consider giving me direct exposure to international markets. Maybe then Shashank, I'll get in touch with you. But until then, no. I mean, it's just I don't have those kind of options, or at least at the large cap scale, I don't see too many options. So I'd love to do what Shashank is doing, but I can't.
Interesting.
Agnel?
So for me, when I pick a company, so like I said earlier, a lot of mine is in sectors that I think are growing because I know a sector is going to grow. I don't know which company within the sector is going to do well, right? So I think that's one. So I just pick the sector because I don't know who's going to win, and I don't want to pick a winner because I don't know who the winner is going to be. So I just say that the sector is going to be a winner. So let's just pick the sector, and I buy a sector ETF, right? But there are specific companies that I buy, and I want to do like a full video on this because it's going to be an interesting discussion. But here's one example, right? So here's one example, and let's say Shashank, you spoke about Shopify, and in my opinion, why I would pick a company like Shopify, right? Why I think Shopify is good. So what Shopify does is that it makes small businesses successful. Right. So what it does is, okay, Nitin's starting a small business, or Shashank is starting a small business, or Agnil's starting a small business. So let's give him the services, give them the services to be successful. Now, what happens is Shopify's billing model is such that it's not just that, okay, Nitin, you pay me $1,000 for Shopify's services a month, and that's it. What Shopify says is, pay me a percentage of the transaction that flows through us, right? So that's what they do. And so maybe a very small percentage, and I don't know what the percentage is, but I'm just saying 0.05% of transactions that flow through Shopify is our tax, right? It's the tax that we charge you for using our services. Now think about this. What is Shashank going to do? What is Nitin going to do? And what is Agnil going to do? I'm always looking to grow my small and medium business, right? So I'm looking to grow. But as I'm growing, my tax to Shopify is also growing. So Shopify, without doing anything, is actually growing its revenue. And I'm putting in an effort to grow my revenue, but I'm also growing Shopify's revenue 20-30% a year, right? Each of us are doing that. So,
but then there are other firms who might flop and then Shopify's revenue drops. So
that is true, right? That is true. Yeah. So, and that's the case with anything, but that is when I would pick a particular company that I think would grow revenues, but other people are also putting in effort to grow their revenues, right? Because I'm
like
making
Uber, but then like Uber, for example.
Right? Maybe Uber in a way, but it's like
but Uber is not doing well. I don't know how it's doing. I'm not sure. But.
Yeah, and Uber is slightly different, but it's like the government, right? It's like the government in a way. So the government is saying, every dollar you own, every dollar you earn, 20% is mine. So I'm going to constantly make effort to earn, let's say, $100,000, 152,000, 150, and then 200 and whatever. But
It's basically a tax.
it's a tax, right? So
Yeah.
I try to find these companies that are the tax companies, right? And I try to pick them because in my mind those are going to grow. So that's one strategy that I have. So I have a list of 3 or 4 companies, and I'll actually share that list with you, which I think are the tax companies. But there are certain companies that have, in my mind, long-term, intellectual property, or there's something where I think that there's a lot of value in their growth, recurring revenue streams, multiple revenue streams. So there are certain researches that I do and I pick specific companies, but or if it's disruptive, like Teladoc is an example where I think it's disrupting Amwell, American Well or something like that, but now it's called Amwell, AMWL is another company that's disrupting like now I don't want to visit a doctor because like unless it's really serious, I would just get on a call like this and visit a doctor. So there are sectors like that I think are disrupting that I would buy specific stocks of, but I would say that is still, I would say, not a majority of my investment. The majority is in sectors that I think are going to do well and ETFs, but there is still a pretty significant number in companies that that I think, based on my research, and fingers crossed I could be wrong, but based on my research, that I think might be doing well, right? So that's my opinion on something like this. So yeah, I don't know if you folks have any thoughts on that.
I don't guess what unlike you guys, I don't try to guess what will do well. I feel like I don't know. And,
okay.
And I don't think I somehow I get the impression that things aren't as intuitive. When what seems rational may not happen to me, may not, it doesn't really happen. So again, like I do the sectoral investing directly via direct equity, because in India, again, the ETFs are not so liquid. Sectoral ETFs, right? So it's I just buy some good company stocks. Let's say, for example, I bought automobile stocks when it was doing badly. I'm like, hey, automobile will probably do well in the future anytime, sometime, right? So, and luckily now it's picked up. Some of the pent-up demand has come and picked up. So something like that. So I tend to buy again. Again, that falls back to the strategy of buying good companies' equity which aren't high, that doing so well. They kind of interspersed, but and I tend to have a sectoral allocation, but it's all simple sectors like automobile, tech, FMCG, and stuff like that. So it's not really something different or major. So banking. Now, for example, banking is low, so a lot of my money is in banking. Although people say that, hey, banking, in India, that hey, a lot of small companies would struggle to pay debts, and that's why the banking sector is low. That's why I bought it. I'm like, hey, it's low. It'll probably go up in the future. I'm not trying to analyze like, hey, it's going to go down because of these problems. I just bought it. Because, for my opinion, a good company comes cheap. That's it. So it's a lot simpler.
So on that note, Nitin, so you spoke about banking, but do you know of any sectors, or do you know any opinion on any specific sectors that you think are going to go up or down, or preferably up? I think that's what people would be more interested in. But any thoughts?
I don't know. I mean, I'm thinking tech again. I mean, I still think tech has a lot of scope. So, but otherwise, I don't know. I mean, look at the sectors I'm talking about: banking, agriculture, or FMCG. I mean, I'm not talking about the kind of sectors. I mean, renewable energy. I mean, I heard this conversation about renewable energy 10 years ago. It's gone, and somehow it hadn't picked up then. But so even, I mean, if I had this opinion 10 years ago, I'd have bought it. But intuitively, I mean, at least in India, these companies didn't do well, and so yeah. So I mean, and I think I bought a little bit, a small cap, but. And it didn't do well, but in my head, yeah, it would have made sense. But so I don't try to guess. I don't know what will do well. I just tend to reward the underperformer. Someone says this is not going to do well, then that's probably the one I'd buy. Okay, I'm like, but in simple sectors like automobiles or banking or something of that sort.
So
nothing
I mean,
more complex. Yeah.
Though what you say sounds very funny, but it's exactly what Warren Buffett said, right? Is that be fearful when others are greedy, and greedy when others are fearful. So
I don't know. So, I don't do fundamental analysis like he does. Right? So,
that's
you cannot just cherry pick his advice, right?
Yeah,
It's
that's
not
true. That's true.
yeah.
Yeah, it's a lot moving. So, Shashank, similar question to you is sectors. So, any sectors that you think?
So the way right now my thinking is very much driven by the global climate crisis. So based on that, what are the things that are going to fundamentally change? I think our need for renewable is going to be a lot higher. So renewable based technologies, like, and it's not just creating solar panels, but everything associated with the infrastructure associated with it, or smart grids. So those things are definitely going to be something which I'm looking forward to, which I think I'm going to pick up. The other thing is, because of climate change and stuff, production of food is going to reduce, as well as a group population is growing. So agrotech will be a sector I'm looking at, which is potentially going to think. So like building in technology for producing higher yield and
Interesting.
or indoor farming, those things. The other area which again climate change is causing us to get concerned is around the whole meat industry. So what are the meat alternatives, right? So things like Beyond Meat
Beyond meat.
or
Yeah.
Impossible Foods
Hmm.
or other meat alternatives. And then there's other things where people are looking at not only an animal for food, but things like leather and other animal products, right? So trying to get that created using more natural products. So those are the sectors I'm fundamentally looking at, and it's right now driven around what would it be impacted because of the climate crisis.
Interesting. It's okay. That's very interesting you say that.
I
Okay.
think even this guy, the Big Shot act. I mean, the character who was based
Yeah,
on the Big Shot,
yeah,
he has similar approach, right?
yeah,
He
he
was,
does.
what was his name? Michael something. Berry?
Dr. Michael Berry.
Burry, yeah, Michael Burry, yes, yeah,
Hmm.
Like I
Okay.
want to invest in water as well. Like he right
yeah.
now is looking at water, but I think what he's doing is something even too crazy for me.
Hmm. Okay.
Like if I could invest in this hedge fund, I will do that and I'll be happy. But because I can't do that, I'm not rich enough to do that. I need
Why?
to figure
Do
that out.
you need a lot of money to invest in this one?
Hedge
I
funds,
don't know.
you need a lot of money to invest in hedge funds.
Hmm.
Oh,
Okay.
Yeah.
Interesting. So, so
What about you?
finally, oh, okay. So, for me, sectors, there are actually quite a few sectors that I see that are going to do well, right? So, I think one is 5G, and why I say 5G is so. Actually, I'll take a step back there, right? So, I'd say 5G with a mix of IoT, because I think that they are in a way intertwined, and why I say that is 5G is not that my cell phone is going to be, is going to play YouTube like faster or something like that. And that's not what I mean by 5G, right? I mean 5G as a combination with IoT, because every device that we use that has electricity in the future, in my opinion, I could be wrong, will probably be connected to the internet, and I could probably control it from my phone. And what I mean is, I could be 1,000 miles away and I could set the temperature on my fridge, see how cold my freezer is. I could check if there's something sitting in my microwave. I could see what's the issue with any electrical circuit in my house, with you know with my washer, my dryer, with anything that has electricity connected to it, or anything where I could potentially make it electrified. I think that all of that will be connected to the internet, right? And in my opinion, it will be a combination of 5G and IoT that enables this, bringing all of this to the internet. Now there is a security risk to it. There are lots of other risks to it, and it may not happen because people may be like, "Why do we need something like this?" But in my opinion, that's one sector that's going to pick up. Genomics is, I think, another sector that's going to pick up, in my opinion, because I'll take, and I was having this discussion with a colleague a few months back, was we don't know, and then maybe there's research on this, is there a specific gene pattern that is affected more by, COVID-19, and some that are affected less, right? Because you have a specific sequence, are you symptomatic? And because I have a specific sequence, am I asymptomatic? And even within symptomatic, because you have a specific sequence, you're in the ICU and somebody else is not in the ICU. I don't know. I mean, I'm saying that maybe that's a question that can be answered. The other thing that I think with genomics is suggested lifestyles, right? So I mean, I look at, I'm thinking by looking at the gene pattern or the gene mapping of a specific individual, will my doctor be able to tell me that your best diet is this, this is how active a lifestyle you must lead. And I don't know. I mean, I'm just thinking those are so many different things that exist. You're more prone to lung diseases, so stay away from dusty places. I mean, can I get lifestyle advice based on my gene pattern, right? That's what I'm thinking. So I think that, genomics is one. Like I said, finance earlier is one. There are, I think the marijuana industry is something that's going to pick up for more from a medical standpoint, because there's now an opening of the mind to things like cancer, to things like epilepsy, to things like, I think, Parkinson's. There are so many diseases that we think that might solve it, and that marijuana might help towards, THC might help towards controlling, maybe preventing, I don't know, but at least lifestyle management of certain diseases. So there are a lot more folks, right? I think that I have. There are quite a few more. I actually have a list, but I don't want to run through that list. It's going to be extremely long, but this is just at a high level as to what I think would be useful and why. Now, could I be wrong? Absolutely, right? I mean, it could so happen that, the next research shows that THC is, in over prolonged period is now cancer causing. So it's just going to completely go away, right? Or something like that. Or, 5G is pointless because there's a massive security loophole within 5G. And, so nobody's going to get 5G, right? I mean, I don't know, right? Like, I have no idea as to what the risks are, but there are risks. But that's the thing with investing, right? I mean, we have to take certain risks. Otherwise, we might as well just keep it in cash. What is that? Sorry.
It's a leap of faith.
Yes, absolutely.
Yeah.
So that's my thinking around sectors. I have a full list, but I think we should go over that some other time in terms of the sectors in detail. But one thing is, and I just want to end with this, and we may have discussed it at the start, but I just want to see if you folks have any thoughts on this. Is so. One of the reasons I wanted to do this video is to convince people that investing is good, investing is important, and it's better than staying in cash, right? That's my personal opinion. But do you have any advice for a 20-year-old sitting somewhere thinking of whether I should invest or not? What would your advice be for someone to get started? That's one. And it could be a 20-year-old, sometimes it could be a 50-year-old who's never started and had everything in cash, right? So what's your advice to anyone who's getting started? So maybe Shashank, please start with you. Start now. Okay.
Like, that's it. Like, let me break it down a little more, right? If you look at the two fundamental concepts of economics, there is inflation and there is growth. Now, if you keep your cash as is, what that dollar would get you today versus what will get you, say, 10 years from now is very different. The value of the dollar is going to drop. So if you're by just holding cash, you are literally leaving money on the table.
Yeah.
And the reason I would tell the 20-year-old to start now is, as I have learned, strategies will evolve. You'll understand more about the markets. And I think the sooner you start investing in the market and understanding, it's better. Because there's no silver bullet.
Makes sense. Which is, it's that's actually a very deep statement you make, Shashank. It's amazing. So Nitin, I don't know, do you have any advice for?
Oh yeah, I mean, like I said, define a goal early, a long-term goal that will actually help you get started right away. Because when you have a long-term goal, then it could be buying a house, it could be anything, marriage expenses, it could be simple financial independence of family. Then when you do that, then you will start and you will feel like allocating money immediately. And when you define this goal, and again, like what Shashank said, understand inflation, then you will realize that you don't have enough money, and you realize that keeping cash is not a good idea. And the simple way to understand inflation is just assume your monthly expenses, and imagine what this assume a conservative or reasonably high on the higher side of inflation. Assume that and ask calculate what your use the inflation calculator and calculate what your monthly expense would be 10 years from now or 20 years from now and 30 years from now. You'll see the difference, right? It'll look huge at that time. So then you'll understand inflation, and you also know that your real returns are a lot lower than what your actual returns are, and it will also help you start, because when you have these goals, when you realize, hey, you need a lot of money for these goals, you will start investing. And that is one. Second thing is, it's easier said than done. Is don't be greedy. So I mean that is my personal strategy, which is like, that's why I don't invest in small caps. From my perspective, I don't analyze so much, right? Like how Shashank does. So if I normally invest in a small cap, I'm looking at a lottery ticket. I'm kind of doing that in a way in large caps also, but it's less of a lottery, right? So it's not the right way to invest. But if you're doing it that way, then really do your homework. Don't just simply jump into a stock because someone tells you to buy. That's one. But yeah, predominantly define goals, start early. That's how Shashank said. Define these goals and understand inflation and compounding. Inflation and compounding are similar. It's compounding in a way.
Yeah.
And that's it. I think over there alone you'll realize a few things. Because you'll understand how the logic of inflation is similar to the logic of expense ratio in a mutual fund.
Yeah.
Stuff like that. So when you calculate real returns. So and then I think you'll automatically make certain decisions based on that.
Interesting. Yeah, I think for me, I would say exactly what both of you said, that you can do two things with your money. You can spend it or you can save it, right? And with saving, you can either put it in cash or you can invest it. While it's always good to keep a little bit of cash, I think one of you had mentioned, having a rainy day fund and stuff like that. I think that's important, very important to have that, because it's peace of mind. It lets you sleep well at night. But the rest of it, if you're keeping it in cash, you're actually losing money, and you're losing money to inflation, right? So because what you could buy with $100 10 years back, you will probably need $105, $110 today. And what you can buy with $100 today, you probably need $110, 5 or 10 years, or maybe even 3 years from now. We don't know how inflation is going to pick up over the next few years. So you're actually losing money. You're losing your purchasing power if you don't invest and keep it in cash, or keep it in assets that historically have been below inflation. That's my thinking. And I think a few other basics that I had said earlier is diversify. I think very important. I mean, it's the more we say it, I think the better it is. And things like start early. So Shashank, to your point, start today, start now. And I think Nitin, to your point, there's no avoid these unnecessarily high risk things where it's, so I would say I would not put it any differently from how you put it. So absolutely. So guys, I mean, I just want to say thank you. I think this was a fantastic conversation. I think I've learned a lot, and I hope folks who are watching have learned from this conversation. So any parting thoughts, Shashank, Nitin?
I actually have one. I think all three of us have so different views on investing. Yes, there is a higher theme which is common, but fundamentally, strategies wise and everything, our view on investing is so different, and that's really cool.
Yes. I agree. Right. I think the vision is probably the same, but I think, strategies are very different, and it's very, very interesting listening. And I think each of us can defend our strategies so well that it's impossible to say, no, your strategy is wrong or your strategy is right, and this and that. So
there's no silver bullet. There's no single answer silver bullet.
Yeah, absolutely. Nitin, I don't know if you have any parting thoughts, Nitin.
Nothing.
No. Okay. Cool. Okay. Take care, folks. Then thank you, and have a nice rest of the day.